All right. Hello guys. Hope everyone is doing very well today. So I just want to do a update on the current trade I'm in. I talked about this in the most previous videos, so do check that out. Kind of go over my thesis, also the live trading as well. And that was before FOMC. So obviously FOMC ended up doing extremely well, worked perfectly for the trade, and it was a very, very clean setup. And I'm still holding the position. I have covered half of the short on the euro to dollar. And now I'm just kind of waiting to see if we can come to my target. We'll see. I do have a trailing stop right here, so we'll see if that gets taken out. If that does, then I'm completely out of the position fully. I'm also in XAUUSD short, which I'll go over a little bit. I didn't really talk about this because I wasn't planning to short this, but I did short it right after the FOMC meeting. Okay, and I also did move down my stop. My stop was actually a little bit higher here for XAU. So yeah, anyways, okay, so let's just go over kind of what's been going on, right? So obviously FOMC, Kevin Walsh was rather hawkish, right? 9 out of 18 members actually proposed a rate hike in 2026. So what does this tell us? Well, it tells us that inflation is still a thing, right? If you guys have watched the FOMC meeting, that is literally what it's been talking about. They didn't really focus or talk a lot about anything else. Of course, they talked about the fact that jobs and stuff is relatively stable. We all already know that the data is there. And yeah, I mean, inflation is still an issue from not just the energy side, but from investments, costs, AI related to that. So higher computing costs, obviously some sort, insurance premiums as well, due to the energy crisis. And every other bank as well has kind of been talking about the fact that this is an interesting market, right? Everyone's kind of been betting on the fact that it was a bit, that the meeting should probably be more, slight hawkish tone, right? Which is what I mentioned in the prior video as well, and it's exactly what happened. Yeah, and that's just from the data, right? I mean, when you see the data, headline inflation is still at 4.2%, PC inflation is at 3.3%. We are accelerating. We are at higher levels than we were before. I mean, headline inflation is literally higher than we're kind of past the 2-year inflation high at this point, and so now their goal is to combat that, right? So that's still quite hawkish. Obviously, the memorandum has been signed. It doesn't seem that it's reacting too heavily to the current trade. And why is that? Because fundamentally, euro is quite weak from a yield spread perspective, right? So the spread between euro and the US is negative. There's obviously a clear negative differential there, right? There's higher interest rates on the US compared to euro. Euro, even though they hiked, it's only at 2.4%. So there's a lot more premium that you can get, obviously, from just investing in the US dollar. Plus, there's a lot more investments that's going into the US with AI, etc., etc. So that's just really going to drive growth. Inflation is obviously, I would say, high on both sides, but yeah, euro is just getting a lot, getting hit with weaker growth. And overall, I wouldn't say it's a very strong currency at this point, right? There's a clear drag there. Whether this memorandum, whether oil prices normalize gradually is another thing. I don't think it I think it'll take some time. I think it'll be a gradual normalization, which would mean this would last a little bit longer within a year. I do think that potentially we probably will get rate cuts next year, but for the most part, the Fed has been kind of mentioning that they expect inflation to kind of go back to the 2% target in 2028. All right, so we still got a long way to go. Regardless, I mean, like I said in the prior video, that putting the straight up for Mars is great, but there's still a lot of things to be done, right? So definitely do check out my prior video. I did go over a little bit more about that, so I won't be talking too much about that here. But in any case, all right, so that's that. I'm not gonna go over too much. What we can see today is yields have definitely pulled back a little bit, not by much. The dollar has still been relatively strong here. We actually still took out these highs. Now we're kind of pulling back a little bit. So now it's whether the dollar wants to break out and then continue, or do we just go back to some of the moving averages right here. We'll see in due time. The Nasdaq has been also moving out very nicely here. We've actually catch a rebound, obviously because of the positive, the news in terms of the memorandum getting signed by the US and Iran. Very interesting times that we're in, right? With Trump spending so much money to fight a war, and then now, we just came into an agreement just like that. So I'm happy with the agreement, obviously. I just find it funny, kind of the times that we're living in right now. But I don't hold any political interest, by the way. I don't have anything against Trump or anything against Iran. Completely neutral. This is just my opinion and what I'm feeling, right? I guess you can say. But yeah, so obviously it worked out very well on my Euro USD trade. Very nice move to the downside here. Just was very clean, super clean. So we did tap into this area. So I actually ended up covering half. I decided to hold into the position. So I did expect some sort of pullback, but I did end up selling or covering half of the position, and I'm leaving the other half to see if we can actually go to our target right here. And my trailing stop would be right at this level right here. So we'll see if we do continue lower, right? Yeah, so very stress-free trade right now. I'm just gonna hold it and see what happens from there. Only thing I would say though is we are at the low end of the range of the RSI, so I wouldn't be surprised if we do get some sort of pullback. So I do want to see how it reacts, you know, at this area of support. Do we hold that area or do we just end up breaking it out, right? So that would be very pinnacle, I would say. So yeah, I mean, that's how I'll be looking at this. I will probably not take any scale in at this area. I think the range is a little bit too low. Maybe if it was around here. I did want to look for an entry actually initially for a scale in, but didn't really get it, so I just let it be. Right, so that's that. And I'm also in XAUUSD short. Very slow move. This one I didn't really use my initial execution entry because this was an entry I took literally right after FOMC, right? So the entry I wouldn't say was the best. I decided to go in a little bit more risk as than usual. So when I actually enter my usual execution method, I obviously everything is mainly with the 4-hour time frame for my execution, but then I'll use the 15-minute for my entry, so I can get those better, I guess you can say, sniper entries if you want to call it, to get better RR. But then the caveat is that I take a lesser risk. Now, however, if I'm just playing straight off the 4-hour and entering right at the 4-hour, I wouldn't mind giving it a little bit more risk, but I wouldn't do that just randomly. So I wouldn't just because it looks good, right? Obviously, this is just kind of shifting to the idea that, okay, we see that the Fed is hawkish, the US dollar is moving, yields are high, 2-year yields especially, inflation is still a problem, right? So that's not good for metals. Metals is going to be going down when the dollar is strong. So that was the idea. So there was a clear macro signal, and so I decided to get into this short because there was a clear macro signal. So this is not a random trade, and if it doesn't work, I will happily take the loss because this is a clear signal. This is a clear trade. It is what it is. I don't, you know, no one knows the variables of the market. There's too many unknowns, right? So we trade based on probabilities. We'll see what happens, but I probably would just, if we do actually sell off, I'll just get rid of the position. I'll probably go break even or trim my stop loss, right? So my initial stop loss is right here. So I trimmed it here. So I'm already, you know, I've already reduced a little bit of risk on this position. I mean, at this point, overall, the risk I'm on for the trade is really not very much. Okay. So my EURUSD, I'm in 0.4% without the cost, right? So gross. And currently in this one, I believe I'm at I want to say 0.6, 0.7%. So I mean, I'm basically in about 1 to 1.1% total risk, right? I mean, that is really fine. Okay. Right, the risk is completely controlled. So yeah, it's just that usually when I'm doing my lower entry timeframes, then I would usually risk a little bit less than what I'm risking here, right? I wouldn't just go in straight with a 0.6% entry on my first entry. Usually I'll go like a 0.2 and then kind of build away from that and things like that, right? So it gives me a little bit more room to really get the better entry, because one of the hardest things to do is to time your entry, especially as a discretionary trader. It's not easy to do that. I think just in general, it's not easy to really have that perfect entry, right? Nobody can really time that. It's pretty much impossible. But in any case, yeah, so that's the overall thesis and the trade that I'm in live. So we'll see what happens, guys. You know, other than that, I don't really see anything much going on for on my end at the very least. Just maybe I can go over kind of what's been going on so far today. Friday is a bank holiday, so nothing much, but we do get retail sales for the pound, so do keep an eye on that. They expect it to, you know, consensus is 0.5%, so let's see if we beat that or not. Today, some of the news, obviously FOMC, then we have GDP on the Kiwi. We can see that we came in as expected, but we did beat the prior GDP quarter on quarter, right? So we are seeing some reversal, some strength coming into the Kiwi, so that's good. Claimant count change for the pound came in a lot higher than expected. So these are unemployment claims. So this is pretty soft for the pound, but average earnings actually came out 4.4%, beating forecast. So we got a little bit of mixed views here for the pound. Obviously, the Swiss franc came in as expected, 0% in policy rate, and the pound policy rate also as well, we expected at a 3.75%. Interestingly enough, I believe two was looking for so what this means is essentially two of the members in the Bank of MPC voted for a hike. In the middle, 0 is a cut. So no one obviously wanted a cut. Obviously, inflation is still elevated, and 7 actually voted for a halt, right? So that's exactly what we got, right? So mixed views overall for the pound. USD hawkish. Swiss franc nothing. Kiwi obviously some strength coming in from the growth side, which is always good. So I believe there's some strength in the Kiwi right now, and the pound retail sales for Friday will be very important to keep an eye on. Okay, obviously if we do see softness in the retail sales, yes, I think it would be a lot better compared to the prior number that we had, which was negative. But if we do actually still, you know, come lower than expected or softer, then I would say we would be tilting more towards a softer pound, which can be a little bit more bearish. Okay, so as far as setups, let me just reload this real quick, and I probably will end the video here. Don't want to go on too long. A lot of my videos have been quite long here, but I try to just talk about everything and kind of push a lot of information right into our videos. But yeah, let me know if you guys actually want shorter videos or longer videos. Longer videos being no more than probably 40 minutes, you know, maybe 30 minutes, 35, and shorter videos being probably like 10 minutes or less. Okay, so let me know if you guys what are you guys actually looking for, that we can see how we can work with that. But okay, Nasdaq being bullish makes sense. I would say though, we have kind of the idea that yeah, if we do actually hike rates this year, I think it would be largely expected. I probably would see Nasdaq having some sort of pullback if that does happen. But as of now, do I think Nasdaq will fall even though the Fed is hawkish? Probably not. I think we're gonna go all-time highs. The reason being is because a lot of the things that has been spoken about is more or less expected. The reason why the dollar has really pushed up a lot higher is because of the uncertainty with the current, I guess, Fed management side. I mentioned that, so this is so far kind of the summary of the conference, right? So there's no more forward guidance, so that's very, obviously, it's a very uncertain thing, right? So markets, you know, I mean, institutions and etc., the markets have to kind of figure out how they want to, you know, price, I guess, their own way of forward guidance now, because there's no more forward guidance essentially from the Fed. No Fed member is bound by their projections. They can change. They have, I guess, the task forces, right, that kind of managing certain parts of the, you know, key areas. I'm not gonna go over it right now, but yeah, they also are looking at new and improved ways, I guess you can say, of measuring inflation, economy, labor market to be introduced. So there's a lot of different, and I mean, there's a lot of changes coming into this current Fed. So obviously, yeah, that is very hawkish. That does create some uncertainty, but I don't think that it's to the point where the Nasdaq will fall, right? I mean, we saw that the memorandum got already signed essentially, right? So that's gonna kind of give some strength to the Nasdaq. So yeah, I mean, overall, I hope that makes sense. But yeah, Nasdaq, I think, is possibly a good buy. I don't know if I'll buy it here, so we'll see what happens, I mean, in the following periods. But yeah, I guess, okay, UK 100, I don't think I'll be looking at that. UD CAD, yeah, I mean, I will have to look through these currencies and see why. But obviously, yeah, EURUSD getting a really bearish reading here. I will say though, from a COT positioning standpoint, I think it's very, very crowdedly short. So that could be a squeeze here. There could be a chance of a squeeze, right? So I want to be careful on this particular trade. But yeah, metals, okay, that's fine. And yeah, so I mean, you guys can take a screenshot of this as well if you want, to kind of see some of the plays that are popping up. Then you can start to plan for the week ahead. But yeah, that's kind of what's been going on so far. And yeah, all right. So thanks for watching, guys. Cheers.